Stocks fell Thursday as a sell-off returned to Wall Street following a brief respite this week. The Dow was down over 800 points, closed down about 348 points. But so far, the Dow is down 4.5%, the NASDQ down 8.7% for December, and the S&P down 6.3%. And they're posting their worst yearly performance since the panic of '08. That's right, the panic of '08, the domain name that I took out in 2007. So where are the markets going? Well, they're afraid that with the data coming out, they're going to keep raising interest rates. And that means the money junkies can't keep their monetary method on, buying it cheap to keep playing the markets, and the private equity groups and all of the rest buying up everything. But it's a guessing game because the game is so rigged. Everything is so corrupt. You know, we talked about the Wells Fargo gang being fined a slap on the wrist of people out of billions and billions of dollars. Same thing, like scumbags at the JP Morgan Chase club over there, gangster banksters, 5 felonies, nobody goes to jail. And then they got that thing called a plunge protection team. So you have to also stay with the data. And following the last 40 midterm elections in the United States, the S&P has gone up in the following 12 months some 16%. But here's the other thing. If this December ends really, really bad, we would expect a very, very dismal first quarter of 2023. So that's our forecast. If it goes down big now, it's going to go really big and hard down in the first quarter of 2023. And you can have the crash happen around March. It was, the whole thing has been pumped up. You know, you could stop the stuff about supply chain disruption. Yeah, that's part of it. All of the countless trillions of dollars that they've pumped into the economy to artificially boost it up is what's pushing up inflation. And now the imbeciles and morons that people call government officials have just increased the debt burden of the United States by only another $2.5 trillion so that we don't default on our debt. So dragflation is, no, it's not going to be a stagnant economy, stagflation. The economy is going to go down as inflation continues to go up. Again, this is global. You're looking at merger and acquisition activity in the United States. It hit an all-time high because they're borrowing all this cheap money and buying up everything. Same thing going on in Australia. So when we look at the real interest rate, what do we have? Near zero interest rate. Now we just mentioned, what, a 6.8% inflation rate? What is the real interest rate? It's in negative territory. So this whole thing is one big scam that's being used to artificially prop up the markets and prop up the economy. Again, when they start raising interest rates seriously, this thing's going to go down big and it's going to go down hard. We said the dot-com bust would bust by the second quarter of 2000. It crashed in March of 2000. So, winter weather in the world where there's a lot of winter in that part of the world, it's not good for business. And business is weakening as they keep raising interest rates because everything was artificially propped up with the monetary crap. You know, what, $6 trillion plus in the United States by the government, and zero interest rate policy, negative interest rates throughout Europe and the EU, you know. So the scam is going to, when it goes down, it was going down, what was built up was totally artificial. So it's going to be the worst crash in modern history. We're in an economic crisis, I believe, is the worst in modern history, with them inflating, artificially pumping up the economy. What are we, over $30 trillion in debt, $31 trillion in debt. And now you're hearing, by the way, one after another, the IMF, what is it, the International Monetary Fund, they came out this past Thursday and warned of very, very difficult economic times for the entire globe. There's reasons, by the way. They're either too stupid to know what was going to happen, or else they wanted to keep the markets artificially propped up, because when interest rates go up, the economy and the equity markets are going down. Well, again, Mussolini called it the merger of state and corporate powers. Yeah, go open a place up here. Here's money to go do it. Hey, I'm a big guy. I want tax credits. The rest of you workers of slave land, you pay everything. Look what the IRS, $80 billion go into the IRS so they could hunt down the small businesses and we the little people of slave land here. You think the Buffetts and the Gates and all the big shots out there don't know how to beat the system and have the whole deal done? They're not going to get a penny from them. They're going to go after us. So I call it a communist fascist state. Gold lost $22 because it's estimated that they're going to raise interest rates, dollar gets stronger, and when your currencies are going down around the world, it costs you more to buy commodities like gold and oil. So, but I'm still very bullish on gold. And to me, gold, and I don't give financial advice. There are no advertisers in the Trends Journal. And by the way, again, but going back to gold, I'm very bullish on it. When the crash happens, gold price is going to skyrocket. And again, to me, they're artificially being pushed down. This is a story. I want to get this straight to everybody listening. Go back to 2018. When the markets crash in December, it's not a good sign. The clown playing president at the time, who the only thing that he did, that he promised to do, was to lower taxes for the bigs, the private equity groups, and himself, Trump, put deep pressure on Powell, Jerome Powell, the Fed head, to lower interest rates because the economy was going down big in the stock markets. And now, with them raising interest rates, inflation continued to skyrocket. What the COVID war did is unprecedented. It's incalculable, the damage it's done. It killed the lives and livelihoods of billions of people. You mentioned about what's going on in Sri Lanka. It's the New World Disorder. It's going on all over.